So the stock market bounced back today in a big way following a stellar jobs report, and the Federal Reserve saying it will be flexible with interest rates this year. Now, the Dow gained 756 points here after losing more than 600 yesterday. The Nasdaq jumped to 275 and the S&P gaining 84. Now, the labor market saw unexpectedly strong growth in December as employers added 312,000 jobs and the unemployment rate rose to 3.9%. So joining us live now to talk about the economy and these dramatic market swings is Bay Area financial advisor James McBride with the McBride Group here. So thank you so much for joining us. So this jobs report, very interesting here because we had over 300,000 jobs added. But the forecast was called for much less than that. What do you think caused it?
Yeah, people are a little bit too negative on the economy. I think that's what it's telling us. Yeah, the estimates were about 180,000 jobs. 312,000 jobs is really, as you said, spectacular. It shows that the economy is really, really strong. And there was some ancillary data to support that. For example, wages went up 3.2% year over year. A lot more people are coming into the jobs market, which is why the unemployment actually rose, which is actually a good sign. And corporate earnings are still forecast to be pretty good, 5 to 7% range last year.
All right, so we're still doing well in that area. Do we know what areas that we're seeing these job growths happen?
Well, the number one is the service sector, healthcare, as you might expect. But manufacturing had one of its biggest gains ever last month. So a lot of the negative news about manufacturing go away, the economy slowing down, doesn't seem to be justified by this jobs report.
Something the president has been talking about. Now, interest rates, let's talk about that for a little bit. When the Feds fear an overheating in the economy, they'll often raise interest rates to kind of keep inflation in check. That, of course, could definitely slow down the economy. But something different happened today. The Fed chairman said something interesting.
Well, what happened last month when the rates were raised, the market wanted the Fed chairman to say, we're listening to you. They didn't hear that. And they wanted to hear that rates would not be raised automatically, so on autopilot, so to speak. Well, today the Fed chairman at a conference that included Janet Yellen and Mr. Bernanke, his predecessors, said exactly what the market wanted to hear. We do hear you. We are listening. We're not going to raise rates automatically. And the market really responded positively to that news.
So we had two great things, the jobs report. We had what they said about interest rates. We also have this. The other piece of news encouraging for investors, the U.S. and China. Now, it seems as though they're back engaged in dialogue again, hopefully to end this trade war. What are you hearing?
You're exactly right. In fact, next week, it's what's called a mid-level delegation is going from Washington, D.C. to China. And China has already agreed to send some of their representatives back to the United States later this month. So what that tells us is the United States and China are talking and maybe even listening to each other. That's pretty big news.
And hopefully we can see some sort of resolve to this, to the trade tariffs that have been issued by both countries because we both are such huge trading partners. Well, thank you so much, James McBride, for your insight into what's happening in the market. Three pieces of good news that helped investors get a great Friday in on the markets today.
My pleasure.
Well, we have more analysis and information on the jobs report right here on our homepage at ktvu.com.